Hey traders, in this video I actually want to do something quite different to a bit of a short-term technical analysis. In this video I'm going to share with you two markets that I actually am long-term bullish on. This is more for investing, more for long-term, okay, not short-term technical analysis, not short-term, meaning if I'm calling bullish these markets right now and the market goes down 5%, it's not like, oh John, you got it wrong. No, this is what's likely to unfold from now through the rest of this decade. So if you guys that understand the markets and understand patience within some long-term investments, this may be very interest to you. But 99% of you little monkeys and bumblebees in the chat box below, this doesn't apply to you. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so see that trading course there? Make sure you grab free membership access to that as well. And I know a lot of you guys right now are struggling with these markets and you're losing a lot of money. I'm having such a fantastic year myself. If you are, then in that trading course, the very first video there is about the biggest mistakes you're making right now and how to overcome them. Because if you don't stop doing the mistakes, guess what? You're probably going to continue making them. So one thing I want to start off with this video is I'm going to start off with this video here with one of the biggest mistakes that I've made in my last 19 years in now trading the markets has been focusing always on the short-term analysis, right? Short-term, short-term, short-term. Get the money now, get the money now, get the money now. And while I still do that, while I still have a trading system that just is the best on the planet, it's the most powerful on the planet, it's the highest probability on the planet. And when I get like an A quality trade that sets up, that comes around in the markets, that doesn't come that often, but when it does, it rocks out, you know, with your sock out. It really, really does. And again, in that trading course, I teach you for free, right? I teach you it all for free. So that was always one of my biggest problems is that I'd do my short-term stuff, get the money now, but the long-term stuff, meaning what's probably likely to happen over the next few years? What's probably likely to happen over the next 5 to 10 years? And how do I position myself with that as well as doing my short-term stuff? Because always about, as before, getting the money now. So my last 19 years has mainly been focusing on short-term trading. Now, when I say short-term trading, that could be a trade that could last anywhere from a few days, sometimes up to maybe a month or more, right? That's what I call short-term trading because it's pretty short-term in the big scheme of things. Because I'm all trading that sort of stuff, right? Few days up to say like the trade. There was 2 trades I was in last month, and I was in them for basically the entire month last month. So on the prefaces or on the back of what I just said there, I have now started to over the last few years really understand the importance of starting to take a portion of my funds and put it into a separate account and start to accumulate on positions that are coming behind us, right? Because some of you guys, you may or may not realize, right? But when we're talking about big things coming, right? When we talk about like a super cycle boom that's coming, I really believe there is a super cycle boom coming in one market. I'll share that with you today. Or when you see big shifts coming, right? When you come like big shifts coming in the inflation, right? Big shifts coming when it comes to the interest rates, QE, the debt bubble, all these sort of things. But when someone says the debt bubble is going to explode, one thing that I've come to realize is that actually that takes time for that to unfold, right? It takes time for that to unfold. It doesn't just happen in one day, right? So for example, the debt bubble is probably going to take another 5 or more years for that to really become an issue, right? Not now, right? We are starting to squeeze on that a bit more right now, but it's probably not going to become we're probably not going to go through defaults until we get through the next round of QE. So on the back of what I've just said there, I believe that through cycle analysis and through what's coming, there's 2 different markets that I'm focusing on right now. Now, the first one is what's likely to happen over the next couple of years. So if we have a look at where we are right now in the cycle of things, where are we? Okay, so we're in a situation where we know interest rates have been going up. Okay, Fed has been raising interest rates as well too. So all of that's happening right now. Okay, we're starting to compress the economy, right? And so what is coming over the next 2 years? Over the next 2 years, we're going to definitely enter a recession. When that happens, what's going to happen? What's the Fed going to do? They're going to what? They're going to drop interest rates. They're going to do QE. They're going to bring down the 10-year, the 20-year, the 30-year, all that sort of stuff. They're going to bring that down as well too, to try to basically buoy the actual the economy again, because we're in a recession. And they're going to do a lot more QE as well too, to really help the economy. Now, what's going to happen is that what they did back in COVID by actually handing checks out, they're going to do that again, but a lot more. They're going to go overboard, which is going to create a second wave of inflation. If you've studied the last 100 years, you've seen this. It's pretty predictable what's coming there. So that's overall what's coming over the next 2 years, right? We're going to go through this recession, and on the other side of the recession, we're going to see them bring down interest rates again. They're going to see big QE, and from that situation, then we're going to go through one of the greatest explosions in some of these markets we've ever seen, right? You think the inflation and the reflation of asset prices was big in 2020, then it's probably going to be a lot bigger probably 2025 and onwards, right? So what I'm trying to do is I'm trying to paint a big picture here of that there. So within all of that for the next 2 years, if we know that's coming, we know that we're going to enter recession, they're going to drop interest rates, they're going to print a lot of money, they're going to bring the long-term rates down as well too. And they're going to start to hand out a lot of money. What does that equal as well too? So if they bring down, if the long-term interest rates start to come down to help the stock market and help all the markets as well, right? They bring down, they cut rates, et cetera, et cetera, et cetera. When they do that, what's the inverse? How can we actually benefit from that cycle over the next 2 years? And that is what? That is the bond market. So we've got TLT here, right? Which is obviously the 20-year bond market. And you could simply buy that, right? So if you look at this here from a bond market perspective, this is a weekly chart. Look where the bond market is. The bond market is around 105. And so the one market that I'm actually invested in is TMF, right? This TMF, as you can see, right, we're basically right down towards these lows through here right now. And so I'm invested in this right now myself. And so by looking at this here, I know that what I've just said there is coming over the next couple of years. Now, when I say over the next couple of years, it's not like one day you wake up and the interest rates are down to zero, right? It's a slow progress. That's why people say, John, you're going to have to wait 2 years for that. It's like, no, you little donkey, right? People don't understand. Like when I say 2 years, over the next 2 years, we're going to start to slowly what? Pause, gradually cut rates, do QE. That's what's slowly going to happen. And so when I say 2 years, I say 2 years because we may get something like this, right? And then over 2 years, we may get something like this, right? And then we start to get something like this, right? Over a couple of year period. So because everything takes time, right? Look here, that was 2019. That there was 1 full year of movement, right? So nothing just happens overnight. And so by looking at what I just said there, that's the first market that I'm looking at to take advantage of the massive cycles that are coming when it comes to that. The next one that's coming is what I call my baby in a sense, has been the GDXJ. Now the GDXJ is one that I'm heavily invested in right now. And there's a super cycle that's coming on this one. The first one is that just simple cycle analysis, right? We went through a big boom, we've gone through a bust, we've gone through a quiet period. What's coming next? All right, just simple cycle analysis. Let's keep it. If you guys have been around more than 50 years, you know that's it's very, very, very. Let's keep it really simple here. We know what's coming from there. Okay. So, on the back of that, that's the first reason. On the back of that, we're definitely going to go through another mining boom, right? It's not like we're never going to go through another mining boom ever again. We haven't gone through a mining boom for over 10 years. Guess what's coming for the next 10 years? Another mining boom, right? It's actually quite simple. It's like quite common sense. What's actually coming over the next 10 years? And when that happens, what's going to happen to the mining sector? We're going to go through a what? A boom. So there's just a few simple things. And I really believe the big boom on the mining sector, especially gold and stuff like that. And some of you guys don't realize that I'm actually long-term bullish gold right now. Short-term TA, it's very, very difficult to see where we are right now on a short-term technical level basis. But on a long-term basis of what I just said here, this is the reasons why. These are the two different markets that I am long-term bullish. That simply means if the market goes down 10%, 20%, these markets, I'm not freaking out because it's not what's happening right now in the short term. where most of you guys are, right? I'm more focusing on what's likely to start to accumulate. And I believe probably on the other side of the recession, when they start to do QE, I believe a lot of these markets are going to go absolutely just burko.